Welcome to the channel. In today's video, we going to take a look at a hot topic, which is inflation. Since the Fed has been printing money like crazy to stimulate the economy, the dollar will start to lose its value. Because of this, investors must know how to protect themselves against inflation. Before we start the video, please hit the like and subscribe button to support the channel. Well, what is inflation? Inflation is a general increase in prices, meaning you will lose your purchasing power over time. For investors, this can turn what appears like a positive return into a negative return if inflation gets very high, for example, 10%. Owning a bond, paying 5% interest annually, may sound like a solid investment, but if inflation reaches 6%, your real return goes negative. As the economy recovers from the pandemic, all the money printed by Fed will likely flood the market. This can cause high inflation to happen. So, it's worth revisiting some of Buffett's best ideas for beating inflation. 1. Invest in good businesses with low capital needs.
During inflation are usually the best. They're the businesses that you buy once and then you don't have to keep making capital investments subsequently. So you do not face the problem of continuous reinvestment involving greater and greater dollars because
Buffett has long advocated for owning businesses that generate high returns on capital. During inflationary times, businesses with low capital requirements that can maintain their earnings should fare better than those that must invest more money at higher prices just to maintain their position. 2. Look for companies that can raise prices during periods of higher inflation.
The best investment, passive investment, I think is a good business. If you own an interest in a good business, you're very likely to maintain purchasing power.
The single most important decision in evaluating a business is pricing power, Buffett told the Financial Crisis Inquiry Commission in 2010. You've got the power to raise prices without losing business to a competitor, and you've got a very good business. If a business can raise its prices, it has a significant advantage during periods of high inflation, because it can offset its own rising costs. Buffett once stated that in an inflationary world, an unregulated toll bridge would be the ideal asset to own, because you would have already built the bridge, and could raise prices to offset inflation. You build the bridge in old dollars, and you don't have to keep replacing it, he said. 3. Take a look at Treasury inflation-protected securities. Another Buffett recommended investment for investors concerned about rising inflation. TIPS pay a fixed interest rate twice a year to investors, but the principal amount is adjusted for inflation using the Consumer Price Index. 4. Invest in yourself. Buffett told shareholders in 2004 that investing in one's own talent is one of the best ways to maintain purchasing power over time. The best surgeon or lawyer in a city or town benefits from an education paid in old dollars, but is able to charge current dollars for their services without having to re-educate themselves. Consider adding a new skill to your resume by attending a local college or learning a new skill online. Advanced degrees can be costly, but they can also help you expand your knowledge and make you an indispensable employee in the future.
The best protection, the best investment against inflation is to improve your own earning power, your own talents. Very few people maximize their talents. And if you increase your talents, they can't tax it while you're doing it. They can't take it away from you. So if you become more useful in your activities, your profession, doctor, lawyer, whatever it may be, that is the best protection against a currency that might decline at a rapid rate.
Increasing your value to your employer and its customers will allow you to command a fair share of your earnings over time. 5. Get out of traditional bonds. Bonds are not the place to be these days. This was stated by Buffett in his 2020 letter to Berkshire Hathaway shareholders. Bond investors could be severely harmed in an inflationary environment, with interest rates still near record lows. According to Buffett, purchasing a 10-year bond yielding 2% is equivalent to paying 50 times earnings for a business, with the key difference being that the bond's earnings cannot grow. Fixed income investors globally, whether pension funds, insurance companies, or retirees, face a bleak future. Hopefully, this video helped you guys to understand the current situation better, and able to make good investment in during high inflation.